Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Silver is king, I'm telling you. I was listening to Ralphie earlier over there in Arcadia Economics, Chris's channel. He was showing some trends I wasn't even aware of that I need to share with you so you could see why it is that investing into silver is a great opportunity for people. So let's go ahead and get into this so you can feel excited for those people who've already started investing into silver and for those who are thinking about doing it. Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, head on over to our friends at Miles Franklin. The link will be down below in the description. When you make your purchase, make sure you use promo code Pimpy, P-I-M-P-Y, and they'll take care of you. If you have any additional questions, you can reach us over here at this phone number or over here at this particular email. For all orders over $10,000, reach out by email and we'll make sure that you get a great deal. So come on over to Miles Franklin and add to your precious metal inventory. Alrighty, as we take a quick look at cryptocurrencies, you can see Bitcoin is at $66,078.71. Ethereum is at $3,546.42. Solana is at $143.75. XRP is at 49 cents. Dogecoin is at 13 cents. Cardano is at 41 cents. Shiba is at 4021. Avalanche is at $29.95. Polkadot's at $6.16. Chainlink is at $14.64. Polygon is at 60 cents. Litecoin's not even in the top 25 anymore. If you go to Terra Luna Classic, look, it's been hovering around about the same level now for quite some time. There's still a lot of chat about them recouping, but we'll see how this turns out. SataChain, sitting at 201095. It's up 0.76% for the day. People are asking me, hey Pimpy, how come you don't talk about the ruble no more? I says, no problem, I don't have a problem with it. You can see it right now. 1 US ruble is worth 0.011 US dollars. Or I should say cents. Way back when they first crashed, if you remember, this used to be 0.0077. Or I should say the other way around was 134. So 1 US dollar would buy you 134 rubles. Now it's not even that. Let's see here. Yeah, see, it's a huge difference. So what was it? I think it was 134. Yep, 134. So if you had $10,000 American dollars and you bought the ruble when it was 134 for every dollar, multiply this times 134, you would get 1.34 million ruble is what you would get. Now if we divide it by what the current rate is, you get $15,086 back. So you would gain $5,086 on a $10,000 investment if you'd have put it in when we first were talking about it when the ruble crashed. Remember, I said it's not going to stay down there forever. It will rebound, and it's going through another slump now. But it's starting to rebound a little bit as they make their move toward de-dollarizing, and they are moving towards this unit if they're going in that direction, and that becomes the official currency for the BRICS nation. I'm anticipating that the countries that are in the basket of currencies should grow in strength and in value. Gold closed the week at $2,348.40 per ounce. Silver, I told you, is going to rebound. People panic. I told you it's going to dip down a little bit, not to panic, and it'll always rebound. And sure enough, it dipped down a little bit and did a rebound. Yes, look at this. We're almost back up to $30. Silver closed the week at $29.62 per ounce. Ralphie's going to talk about some very, very interesting trends that I think you guys should really listen to for both gold and silver.
There was some big news this week about the CPI, the Consumer Price Index inflation rate, which is pretty fluffy and not very reliable, but it does say something. We should keep in mind that according to this Atlanta Fed Sticky Price Inflation CPI, which calculates prices that do not change very often, we are still at highs from 1991, 33 years. So it's a 33-year high in sticky price inflation, 4.3%. Yes, we have descended from all-time, not all-time highs, but since 1978, I think, or something like that. So yeah, we've descended here, but we're still at highs not seen in a third of a century. So put things in perspective. And now to gold open interest resetting here. I want to show you one of my patented rectangular charts showing correlations in gold futures between open interest and the price. So in this box, we see here that the gold price has descended from about 2450, from a high of 2450 to 2300. You'd say $150 from 2450. So that's about 5-6%, something like that. Not much of a move in gold for a move of 100,000 contracts down in open interest. We are at 436,000, 437,000, maybe a little bit lower today. As you watch this, gold did fall a little bit yesterday, which probably means open interest fell further. I would like to see us get back down to 400,000, which cemented a pretty strong bottom back in late February, from which we decided to rocket from about 2,000 to 2450. We could see that again if we descend to 400,000 open interest contracts here, and we're pretty close.
If that happens and we do the same amount of growth, so it has been consistently around, I'd say, 2350. Where was it around? 2050. So about a $300 increase. So if this happens again, it could get up as high as $2,700 per ounce. And if this goes up to $2,700 per ounce, you're going to start to see silver take off, just like gold will. And you can start to see silver somewhere around $35, $38 per ounce.
So just to show you what happened last time, we fell about 100,000 contracts. We fell here from 500,000 at the beginning of 2024 as the year turned to the end of February. So that took about 2 months. That's it. A fall of 100,000 contracts, and it was only a fall of $100, 4.7%. So after that, we saw a big move, and we're seeing something similar, about $150. It's around the same percentage, and the same 100,000 contract fall. If we can get down to 400,000, that would be about 140,000 contract fall, and then we should be around a pretty firm bottom. This is a chart that I shared on the Endgame Investor, which you can subscribe to for free on Substack, endgameinvestor.substack.com. And this shows the amount of bank reserves being taken up by repos. Bank reserves is the high-powered money that is at the bank account of the banks at the Fed. And there's a total of about $3.4 trillion available now. We can see here why the repocalypse happened. Going into the repocalypse of 2019, the repo markets were getting more and more flooded, more and more crowded, as more and more hedge funds were accessing the repo market to fund their treasury shorts, which is the same thing that's happening now. There's record amounts of short positions in 5-year treasury notes specifically. I don't know why that security, but I do know that the spread between futures and spot in the 5-year treasury notes, futures, and the bonds is about 76 cents last time I checked. And so that's free money that you can get by selling futures short and buying the bonds themselves. So that's why there's so much short positions in 5-year futures, and those futures positions are being funded by the repo markets. So the same thing's happening now as happened back then. We're not at the extremes because we have higher levels of reserves. But the point is, here at the high here, which caused the repocalypse, 85% of bank reserves were being taken up by the repo market. We're now at 57%. We've been trending higher since 2022. And when we get near 85%, that should be the next repocalypse, where the Fed has to print repos, print money to fund the repo markets, and then print a whole bunch of money besides. The higher we go, the closer we get to that wall, is the general point. Bullion bank shorts near records. So we just did open interest in gold, and this number could be different now. It's on a 10-day lag or something like that, maybe 2 weeks, something between 10 and 14 days. So we do see here that bullion bank shorts are at 226,000, and they've only been higher than that once in 2022. I think this is the March 7th, 2022, nickel Armageddon, where the entire commodities futures markets across the globe almost crashed when there was a big short squeeze in nickel. But we do see here historically that when we are at these levels in bullion bank shorts, we are typically at highs or local highs in the gold market. It doesn't happen every time, but it did happen these 3 other times. So let's say 75% of the time to reach these levels. So it happened in 2016 at the 2016 high after the end of the bear market. It happened here in mid-2020 leading up to the August 2020 high. And it happened here in 2022 around the nickel short squeeze. So chances are we still need to descend a little bit more in the gold market. Doesn't mean we have to break this up trend line, but we could get a little bit lower. And then we'll be at a firm bottom once we hit 400,000 contracts in open interest and these short positions get covered. Chinese premiums. I've showed this chart before. I want to make it a little bit more concise this time. So I rectangled the 3 previous times when Chinese premiums for silver were at these levels, these consistently high levels of about 13%. So there were 3 times, right? Once in 2011 following the silver top. And that here, if you follow the rectangle, is at this low after the second major sell-off after the $50 top. So meaning this premium came at a local silver low. This premium also came at a local silver low at the end of 2014. And so did this one at the 2020 sell-off when silver hit about $11.50 during the COVID lockdown panic. This is different though, because these premiums are rising even as the silver price continues to rise. So this has never happened before. And it means that there is sustained demand in China. Doesn't mean there's not going to be pullbacks. We just saw one a few days ago. But the Chinese are stacking silver. Exactly why? I suspect it has to do with their falling real estate market. And Chinese need places to put money that isn't in real estate. And they're going back to their tradition.
Well, that's not including India. India has been buying up tons and tons of silver.
Of stacking gold and silver, because even in China, it was money and still is. A long-term look at silver open interest. So we have here, we see different stages in this market. In the 1970s, it was very obviously clear that the silver derivatives market, that the silver futures market was being used to manipulate the silver price down. You can see here that open interest climbed to all-time record highs that haven't even been close to being replicated since then. So we have here in the 1970s, this is after the 1974 parabolic top here at about 650, I think it was. And then silver didn't do anything until 1979 about for 4 years. So why didn't it do anything for 4 years? Because, well, everything was being done in the futures market, and that was clearly being done to suppress the silver price, stacking huge amounts of paper silver over the available silver supply. And that ended in 1979, 1980 as these positions were being closed, and silver went into a parabolic top that has still not been replicated since. This is the end of manipulation, right? At least as per the futures market affecting the silver price. And we see here that since then, in 2011, when silver hit $50 again, there wasn't much activity in the paper futures market. There wasn't much activity in open interest here. It wasn't being done there. I think this was mostly an ETF-driven rally. It was an SLV mostly, and it could be that retail traders were just chasing it. But we see here that we have an inverse correlation as open interest gets higher from 2011 until 2020. The silver price trended lower. So that was sort of like this, but not as much. And now we're seeing a local higher in open interest and a push to silver beyond 30 here. But my point is here that silver...
You can see right here it's inverse. As this goes up, silver goes down. But what you're seeing here is as this goes down, silver's going up.
Open interest is not very much correlated to the silver price. I wouldn't worry that much in terms of long-term trends about silver open interest being high here. No, it probably does need to set down a little bit. I'm going to be following gold open interest, and silver should follow that as it naturally does. The final chart I wanted to show you here is the...
Yeah, let's watch this because I've not seen anybody point this out. So Ralphie is the first person I've seen point this out.
Higher in the slope of the trend lines in the gold market since the 2015 bottom. So if you draw a trend line from the 2015 bottom over here, late 2015 at around 1054, And then we had a trend line hit in 2018 at about 1250 something. We're way beyond that trend line now if you extend it out to the present. Then we established a new one at that bottom, which was tagged in 2020, late 2022 at 1610. Right, so that trend line, we're now at a new one with an even higher slope from the 1610 bottom until the September, October 2023 bottom. That's also happened to be when silver hit $16. So that was about 1810, 1820, if I remember correctly, in gold. And now we have a new trend line established from then, which was hit in early 2024. And now we are way beyond that trend line. And notice also that these trend lines keep getting shorter and shorter by the time the trend line slope increases. So the rate of acceleration in the gold price has accelerated. That's what acceleration is. The trend line in the gold market has accelerated since the 2015 bottom, and we keep going higher, faster. It might not feel like it during little pullbacks like this one, but that is the situation.
So from this point to this point, it took almost 3 years. And then from this point to this point, almost 4 years. But then all of a sudden, from this point to this point, it's about a year. From this point to this point, we're talking months. From this point to this point, even shorter. So gold continues to rise at a rapid pace. And remember, gold rises slowly and goes down slowly. Silver is the one that acts like a spastic kid on sugar. It goes up really quick and comes down kind of quick. When I say quick, I don't mean that quick, but quicker than gold does. So as I watch gold make its move, I know that silver is shortly right behind it. Anyways, I'll leave the link for Ralphie over here at Arcadia Economics. So you guys can go ahead and check out the whole video. Right now is probably one of the best times to be into precious metals. There's so much uncertainty about what's going on in the future. But even so, when you start seeing central banks move into precious metals to protect themselves, you should be doing the same thing. Do as they do, not as they say. And when you're ready to buy gold and silver, head on over to Miles Franklin. You can give him a call at 844-874-6797. Let them know what your interests are. They can help work something out for you. Let's say you're somebody who inherited $10,000. Say to them, look, I got $10,000. What direction should I go into? What percentage should I have in gold? What percentage should I have in silver? They'll be more than happy to answer some questions and work with you. All right, so give them a call. Anyways, I appreciate Ralphie doing what he does, and I appreciate that Chris has Ralphie on. I'm glad to hear that he's safe. I hope he stays that way. Anyways, that's it for now. I'll get at you later. I'm out.